Welcome to the World Show with Equity Kings. My name is Dumisha Ramodisa and I'm accompanied by my co-host Sebonga Chuma. Welcome to the show, guys. This is the intro episode of Season 2, the anticipated Season 2. So this is the intro episode, and then we're going to have an interview, which is the next episode. We've interviewed Ryan Miller. I think you guys are going to enjoy that interview. It's very powerful. But setting that aside, I hope you're good, I hope you're good.
I'm good. I hope you're good, listeners. This is Season 2. I might go by the name of Sebonga Chuma. I'm your co-host for today. And yeah, let's grow together. What have you got for us there, Dumisha? Can you hit us with a market update?
Yeah. You know, I'm gonna have to skip that market update. You guys will see the market updates in the next episode. I've been doing market updates for most of these episodes, but we'll see the market updates somewhere else, another episode, just not today. But what I do have for you guys
today, wait, before you carry on, sorry, I just want to jump the gun, you feel me? You don't want to do a market update because Bitcoin is doing higher highs, but it's fine, you can carry on.
Bruh. No, dude, I'm actually honest. I never said Bitcoin isn't gonna go up.
It's cool, G.
Okay, but we'll do a market update the next time. Yeah, by the way, Bitcoin is up like balloons and gazillions and bazookas. Okay, fine.
So let's talk about today's business.
Yeah. Let's go into today's business. So something's interesting, and I wanted to talk about this for a week now as we're anticipating the Season 2. We're preparing all these stuff. But this is unrealized capital gains, because recently in the United States of America, U.S. Treasury Secretary Janet Yellen has proposed a tax on unrealized capital gains of billionaires. So those people over 1 billion. So basically every single billionaire is going to fall victim to this unrealized capital gains. So how does this capital gains tax work, or this unrealized capital gains, which is obviously stupid, but for those who don't understand how capital gains tax is, a capital gain is, let's say I'm a normal person, I'm an average Joe, I buy a share of Tesla, right? And Tesla, let's say the price of Tesla is $100, right? Let's say I'm American. I'm obviously not an American, but okay, the price of Tesla is $100, and then the price goes up to $200, which means that I've made a capital gain of 100%. So I haven't sold it yet, but once I realize that gain, meaning I have sold my stock, I've sold my shares, and then obviously when I sell it, I have $200. So I've made a gain. That's a realized capital gains. So what is unrealized is if I do not sell it, if I just keep holding it, that's an unrealized gain. So I have a gain of 100% on paper. It is unrealized. So what the government is basically saying is, for billionaires exclusively, what they're saying is they're going to tax unrealized gains. So as billionaires' net worths keep going up, we keep seeing the news. Elon Musk is now the richest man in the world. What is his net worth? 300 billion, because Tesla's stock price went up dramatically. I mean, Michael Burry got squeezed with his short, so it probably hit him. He shorted Tesla and he got squeezed. So this is an unrealized capital gains. And I don't even know if it's constitutional when you think about it. Unrealized capital gains. Why would the government tax a gain that hasn't been realized? Because that means the billionaire didn't make any money. Elon Musk's net worth went up dramatically, over 100 billion in the span of 2 weeks. And you want to tell me that he has 100 billion in his bank account? No, that's not how it works. He just has 100 billion gain on paper. It means nothing until he sells it. So
it's net worth. Yes.
See? So what's your take on it here? Do you think it's fair? Do you think it's unfair? What's your take? And I really want the listeners' take. I think you guys should just text us, comment, and just tell us what's your take on this, because this is utter nonsense in my opinion.
My take on this, as Peter Schiff said, is that the government is injecting heroin into the system with these stimulus checks, but then that's a whole nother argument. But obviously we know the government needs a way to fund their liabilities. So now they are trying to be extremely innovative by trying to implement such things, of which it's unfair, because It's not free market capitalism at hand taking place.
Yeah.
I mean, do you feel it's fair? I feel it's fair to tax them on realized gains. I feel it's fair like that because realized gains means it's something that's there. The position has been liquidated.
Yeah.
But yeah, what can we say? And also another thing, on the other hand, if we can really look at corporate tax, if we can look at corporate tax, I feel it's another way to just take as plenty times as you can from the same person in a different perspective, in a form of, if you own a business, the government is going to tax your business on the profits that you made. And then when you get paid out dividends from your own company, still the government is going to take you from that. So the government wants to stick its finger in every piece of the pie.
Yeah. And you know what's also ironic about that? They say it's a tax on billionaires. Once people actually allow this to happen, then it's obviously going to trickle down to the poor. The poor are going to end up paying unrealized. I mean, they always start with the rich because think about it like this. Obviously, the rich won't pay this. The rich will find ways to dodge this. They'll obviously put their money elsewhere. They put their wealth elsewhere.
Besides, the amount of wealth they've accumulated won't really affect them that much. But it's gonna affect average Joe and Jane because now the economy could go into a stagflation, for instance.
Yeah,
But
true.
that's a whole other debate. But yeah,
Yeah, yeah,
these
yeah. I get what you mean.
possibilities that could happen. But yeah,
Yeah,
I feel like we'll tackle more of these things and broaden them out. And also, I think people need to listen to what Ryan Miller has to say. Really mind opening. I think yeah. I think that's it from me.
yeah. And just to close off, one point about this capital gains and why I think it's unconstitutional is because that is not income. The government can only tax income. And so, as Peter Schiff said it, spoke about this in his episode. You'd have to redefine income. It's unconstitutional because the constitution only allows you to tax income. So I mean, things like property tax, I mean, that's unconstitutional. I don't know why we still have property tax, but I think people don't care about the constitution. But think about it like this: for an unrealized gain, when you actually realize a gain and you sell your shares, right? Then you've made an income, and therefore you can tax that income. That's an income tax. But obviously, it's a capital gains tax, but it's income. You see, because you've derived money, you've derived something from other sources, whether it's capital gains, whether it's a salary or whatever. But this is not an income, so you'd have to change the definition of income, and I don't think that's possible. So if we do that, then America's basically a banana republic, if you ask me. So we don't want to go on that rabbit hole. But guys, tune in for the next episode. We'll be interviewing Ryan Miller, and you guys are gonna love that interview. It's extremely powerful. We talk about the monetary system, M2, M1, whatever. We talk about MMT. We talk about why government spending is bad, but mostly about the whole inflation deflation story. So you guys are gonna have to tune in nicely for that episode. Any final thoughts here?
You have to listen to it. Trust me, it's going to change your life and your whole perspective.
Yeah.
I mean, economics is broad.
It's broad. We don't know what's going on in the shadows, and Ryan Miller explains that so perfectly. He's one of the smartest dudes I've ever spoke to in my life. Probably one of the smartest dudes. But yeah, well, you guys will have to listen for yourself. So thank you guys for tuning in, and we will see you on the next episode.
Cheers.